Inventory is up, interest rates are high, and properties are coming down in price. And everybody's asking the same thing. Should I buy now or wait? Here's the reality. If you're waiting for the perfect time, you might miss your window of opportunity. And if you're jumping in too fast, you could be overpaying for a house and with a payment that might wreck your budget. The cost of getting this wrong isn't just financial. It's about peace of mind. Is this the year you finally buy a house or the year you regret rushing in? Let's take a minute to break it down. Housing inventory is up huge and the highest level we've seen in a very long time. And on top of that, we have a lot of neighborhoods that have returned to pre-pandemic levels. And if it can't get any worse, buyer demand is down. And this is primarily due to affordability. High rents, high prices, and high interest rates. And right now, this is giving us the most balanced playing field that we haven't seen in a long time. This is resulting in buyers having a lot more leverage when it comes to purchasing a property. But it's important to realize that not all real estate is created equally. Here's a question for you. Are we going to see home prices decline even further? Are we going to see a housing crash? In some markets, buyers are still seeing bidding wars. In others, we're also having lots of condos on the market. So the question of should you buy now or should you wait not only depends on what type of house you're looking for, but what part of the city you're looking in. So if you're not looking for a condo, the market right now shouldn't affect you as much. And if you're buying a house in Vaughan, you really don't care what the market's doing in Hamilton. I want to say something right now that's going to piss a lot of people off. Buying a house isn't picking it at the right time, or at the right price, or at the right interest rate, or even the perfect monthly payment. It's all about buying when it's the right time in your life. So when does buying actually make sense? And in my opinion, it all comes down to having stability. Not only do you need job stability, you need relationship stability, and you need income stability. And in addition to that, you need to be thinking 5, 7, 10 years down the road. Buying a house isn't like buying a stock. It's not like you need to pay attention to it every day like the stocks do. Buying a home is locking in your housing costs over the long term. And yes, I get it. It's more expensive to buy a house than it is to rent. But what I can tell you, over a 10 to 15 year period, it's going to cost you a lot more money to rent a house than it will to buy a house today. And the earlier in your life that you can become a homeowner, the earlier you can fix that housing cost. Because guess what? There is no 30-year fixed rate on rent. And I know a lot of you guys are thinking you can rent that house today and take that surplus and invest it in the stock market. You're making money on that investment. And that way you don't have to worry about the cost of buying a house. And you don't have to worry about a down payment. You don't have to worry about property taxes. The problem with that is most renters don't have the discipline of doing that, to take the difference from mortgage and rent and apply it to the stock market to create that generational wealth. And that's why homeowners have a 40-time greater net worth than renters do. So being a homeowner and fixing your housing costs does come with benefits. It gets easier to create generational wealth. And the first way is every time you make that monthly mortgage payment, a portion of that payment is going directly to the principal, which in turn is building equity. I know what you guys are saying. The first couple of years of paying a mortgage, you're just paying the interest. But I can tell you this, guess what? When you're renting, you're paying zero towards the principal. In addition to that, homes have appreciated on the average of about 5% yearly over the last 20, 30 years. This doesn't mean it's going to happen every single year. The reality is that homes are going to appreciate over time. And that's another huge benefit of home ownership. So not only are you paying down your principal, another way for savings, you're also getting appreciation in that home, adding additional equity. As a renter, there's no refinancing anything. Your payments will go up year after year. And typically that's going to increase about 3% a year. And on the flip side, homeowners, your likely payment will come down year after year after year. And this is why real estate is one of the most reliable long-term wealth builders. But this doesn't necessarily mean you have to rush out there and buy your house today. Because let's face it, buying a house isn't for everybody. In fact, right now might not be the great time for you to go and buy. And the reason why I say that is you might have a shorter term timeline. If you're not thinking 5, 7, 10 years from now, and if you're just thinking, this is going to be the home that I'm going to live in for the next 2 or 3 years, I'm going to be moving, I'm switching jobs, I'm moving to a different city, whatever the case may be, if this is only a temporary thing, go ahead and rent. And this is because real estate really shouldn't be looked at in a short-term time frame. Yes, the last 5 or so years have been great for real estate, but they've also been completely abnormal. A lot of people that you might know have bought properties in the last 5 years. They've gained equity, they've been able to sell those homes, buy larger homes, and sometimes making a lot of money on those properties. But the key thing to understand is that's not normal. And the likelihood of us seeing this in the next 5 to 10 years is very, very, very low. We might actually see little to no appreciation in the next 5 years, which really means we're going to see appreciation trending at the rate of inflation. And that's about 2 and 3% per year. This doesn't mean home prices are going to get less expensive. They're just meaning that it's not rising, or the appreciation is not rising as quickly as it once did. And on top of that, if you're someone who has low credit scores or bad credit, no money in the bank, or doesn't have a stable job, and key is you don't have any financial stability. If you don't have any of these stabilities in your lives, and now isn't the right time to go buy a house. I get it. FOMO was real, and I understand that. But rushing out to buy a house when you don't have all the other pieces of the puzzle is definitely the wrong approach. In fact, my opinion is that's going to come back and bite you. I would rather you work on your credit score, your down payment, your stabilities, find the right job, find the right payroll, find the right deposit, and find the right neighborhood to purchase a home. Find the right type of home to purchase, as opposed to rushing out and just doing it for the sake of doing it. Because you saw someone online, or you saw a relative, or you saw a neighbor, or you saw someone else doing it, and you got that fear of missing out. And let's be clear, everybody's situation is different. And this doesn't mean it's the right or the wrong time for you. And if you're going out to buy a house now, and the only way you're going to be able to afford it is that you think the interest rates are going to drop. And if you think the interest rates are going to drop over the next couple of months, so you can actually afford that payment, now is not the right time for you to purchase a house. You have to be completely confident with what your payment will be for the next 5 years. You need to have money in the bank. You have to have a reserve fund. You have to have a backup plan. But on the flip side, if you're one of those people sitting on the sidelines waiting to see, just because you think home prices are about to drop, you think that there's going to be this golden opportunity, you got to really think about why you're waiting. I understand that nobody wants to catch a falling market, but the likelihood of properties coming down so much that you can actually benefit from is highly unlikely. And the biggest factor is supply and demand. When you have very little of something, in this case the supply of homes, and you have a lot more buyer demand than there is supply, this is exactly what creates prices to go higher. And this is exactly what we've had over the last 5 years. And why this was because of all the immigration that we've been experiencing over the last 5 years. We've had a lot of newcomers coming to Canada, and they all need a place to live. Fueled by low interest rates, high demand, prices went up. If it wasn't for the amount of immigration and low interest rates, we wouldn't have had this super high demand that we currently still are having. If interest rates weren't so low, people wouldn't or couldn't afford bigger and better homes. And let's face it, a lot of people only bought because of the interest rates being so low. It was way more affordable than any other time to purchase a house. It was a lot less expensive than renting. So ultimately, we are in a balanced market. But with that said, sellers aren't giving away these homes. They also have bills to pay. They have mortgages to repay. For them, they're not giving away the home. And in this market, you have to focus on what you can control. Your down payment, your deposit, employment, your monthly earnings, your costing, your savings, and of course, your spending. If I was someone sitting on the sidelines waiting to buy a house, what I would be doing was taking extra money, call it $2,000 a month, and putting it aside to save up for your down payment. What that also does is that might be what your extra monthly mortgage payment will be. What you're doing is you're getting comfortable making that higher payment. So when you actually have the mortgage and that payment is going to be higher, you've already been accustomed to making that payment, and it won't be that big of a shock. And what we talked about earlier is that it comes down to income and stability. You have to have stability. I think one of the key things to understand that in our current environment, the things that are bothering us the most are completely out of your control. You can't control mortgage rates. You can't control house prices. You can't control the tariffs, food costs, or any of that stuff. But you can control your decision. So you have to be asking yourself, is it the right time to buy a house? Am I doing this for the right reasons? Can you comfortably afford it? Doesn't mean you're going to like the payment, but if you can do it, now might be the right time, because you're locking in your payment for the next 30 years instead of renting. By the way, my name is Tony, and I make videos about living in the GTA. So if you're thinking about buying a house, my contact information is below. I'd love to work with you. If you found any value in this, please subscribe and hit that bell icon to get notified of everything happening here in the GTA.